get focused on another management, Birla Corp. The stock has been under pressure of late. It hit a high of around 1,800 rupees, but it's seen a correction. In fact, in the last 1 month or so, the stock has lost close to around 17% of its market capitalization. To understand what's the way ahead post the weak showing in the first quarter, we have with us Mr. Aditya Saraogi, the CFO of the company. Hi, Mr. Saraogi. Good morning and always a pleasure talking to you. Thanks a lot for speaking to us here on CNBC-TV18. Well, the start to the year has been very, very subdued. Volumes are flattish. The EBITDA per tonne has come in to around that 600 rupees per tonne mark. What's the view for the remainder of the year? Earlier, you were talking about high single-digit growth in terms of volumes. And EBITDA per tonne, you've always been guiding for around 850 to 900 rupees per tonne. Post this weak start, what should we look forward to?
See, I'll give you a broad view. We are currently not making any revision to the guidance. So the broad view remains that Q2 will continue to be soft because of the seasonal effect of monsoon, and coupled with the fact that our ground check suggests that the government spend are not happening. But post Q2, we expect a meaningful recovery in the overall demand for the industry, and estimates and projections suggest that the industry should go at a rate of around 7% for the year as a whole. And we should not be different from the overall growth of the industry.
So 7% growth at the top line level for the full year, that's what you're saying. Can you, sir, also give us some sense of volumes as well? Overall, will this growth be more volume-led, or do you think that you will get some kind of a pricing lift once the monsoon period is over? And also just give us the immediate trends. Q2, what have you seen in pricing? Q1, what was the average realization?
Yeah. So in terms of growth, I meant volume only, growth in terms of volume. Okay. And in terms of the immediate term, because of seasonal effect, the monsoon effect, we are continue to see pricing pressure. And so far, we have seen about 2 to 3% drop in the realization. But post monsoon, beginning from somewhere September, October, we expect demand as well as the realization to pick up. And the costs continue to remain quite benign. So on cost front, all cement companies should continue to see healthy savings.
Okay, you gave us the volume target, sir. You expect to grow as much or more than the industry. So more than 7% is what we're noting down. EBITDA per tonne, the lowest we've seen in multiple quarters. Where is it headed from here on? In quarter two, again, it will be under pressure because you're saying pricing is down, though you have some cost levers that you're looking at. So on an average for the year, what should it be?
At this juncture, Nigel, we are not able to provide any guidance, but by the end of next quarter, we'll have better visibility because it's primarily going to be a function of the volume and more importantly, the realizations. So how the realizations shape up post the monsoon. So at the end of second quarter, we'll be in a better position to give you some guidance on the EBITDA margin for the year as a whole.
All right, sir, second quarter is unlikely to be much better than the first quarter because of it's a seasonally weak quarter. So assume you do 600, 650 rupees on a per tonne basis. It'll be very difficult to give an average of 850 to 900 rupees because that would mean the second half of the year you have to do more than 1,000 rupees per tonne. So in all probability, for the year, you could end up closer to around 800 rupees per tonne, even if you do 1,000 rupees in the second half of the year.
I'll not get into specific numbers, Nigel, but let me give you a perspective. Even in the previous financial year, we began at around 650 rupees a tonne. Our EBITDA per tonne was not much different in the second quarter, but we made up in the third and the fourth quarter. So this year could be no different.
Okay, all right. So let's see how you recover then. Also tell us about Mukudban. What is the targets for this year? I want 3 numbers with regard to Mukudban. One is on volumes. If you could tell us what is the difference between your remainder of your business and Mukudban on an EBITDA per tonne basis, and what is the incentive you're factoring in for this year?
We are on EBITDA basis, we are not disclosing the numbers separately for Mukudban, but in terms of volumes, we expect to be at around maybe 2.7, 2.8 million tons for Mukudban this year. In terms of incentives, in this year for the company as a whole, we have baked in about 110 crores for the company as a whole, and we stand by that guidance.
Okay. Sir, let's talk about what's happening in the sector overall, right? So much consolidation, the bigger getting bigger and bigger. How do you view this? And then just tell us your own plans as well. How much Capex are you putting to work in this year and maybe next year? And will you think of inorganic moves? And how will this consolidation impact you in your key markets?
Oh, in terms of Capex for this year, we have guided for 800 crores. We are standing by that guidance. And in terms of slightly medium-term perspective, we have guided for increase of 5 million tons to moving up to 25 million tons by 27. And we stand by that guidance also. In terms of effect of consolidation, we feel that in the medium to long term, it's going to be a very healthy trend because as the weaker players move out of the market, and the consolidation is always seen to have a positive impact on the industry.
Okay, so just reiterating the numbers, this year you're putting 8,000 crores to work. That's your Capex for this year.
800.
Sorry, 800 crores. And in the medium term, you're adding 5 million tons.
Yeah.
Okay.
All right. Just to press on that other point, sir, about the two giants lapping up companies left, right, center. So, and more and more as we see it, the consensus is becoming that, well, we're going to see a lot more of it. How does it change competitive dynamics for you?
In the short term, there may be some pressure, volume pressure, as they want to increase their market share. But in the medium to long term, we expect that a consolidation should be healthy only for the industry.
Yeah,
there
but
will be
don't
more
you think
discipline.
you don't participate in the consolidation?
As of now, our focus is to grow organically. Maybe in the long term, definitely, why not? If we have a good opportunity.
Because I recall when we chatted once, you said $100 per ton is okay. And these deals are happening now. I mean, I wouldn't think India Cement happened at the price that it happened, or even Penna, given the dynamics. So don't you think if you're getting something at $100 per ton, and I know plenty of assets actually, don't you think you're missing out? You would like to participate?
You're absolutely right, Nigel. But you have to look at the leverage position also. Our balance sheet leverage at current juncture does not give us that leverage or option to go for a major inorganic
Okay.
activity.
All right.
So what is the number, sir?
I think we were coming to you from a seller's perspective. Not to buy, but to sell, sir. Yeah.
Yeah. So seller, I would be. I have to weigh the assets more than the tangible assets. I have to weigh in what kind of assets I have. For example, what kind of mining mineral reserve, what kind of competitiveness I have in the market, what is my brand strength in the market. So it's a function of various parameters.
So what does that mean, sir? So you're saying, I mean, has an approach been made? I mean, have you been approached? Have you been offers been made? Nothing.
So you said that your balance sheet strength currently doesn't allow you to look at a big inorganic push. Just tell us what is the debt level? What is the thought process? Are you looking to reduce debt? Are you comfortable? What is the gearing and whether you're comfortable with it?
See, our current net debt is 3,150 crores. We ended the year with a net debt to EBITDA slightly less than 2. So we are comfortable in terms of debt to EBITDA.
Okay.
But in absolute terms, the debt is not very low. Okay. So, and given our plans for organic expansion, we should not expect it to go down. So there will be repayment, but then we'll be raising fresh debt for the expansion.
Okay. All right. So very quickly, before we let you go, there was that Supreme Court verdict that came with regard to taxes being implied retrospectively if states go ahead and, ask for it. I understand that it shouldn't be that big an impact on cement companies, but the street still has a question mark. Your comment on that? For your company, is there any pending liability? And going ahead, do you think it will be a big increase?
For our company, there could be some impact, but we have made full provision for whatever impact is there. So on our income statement, there's not going to be any material impact.
What is the amount?
Maybe we don't have the full calculation, but maybe around 9-10 crores or something of that sort. But we have made full provision, so there's not going to be any hit on the income statement.
Okay, Mr. Saraogi.
And for the sector as a whole, yeah.
Yeah, go ahead, sir. Finish that point.
For the sector as a whole, it will be a function of what kind of levies have been made by the state governments and what kind of stand has been taken by the individual companies. So if the company has gone for litigation, whether they have made full provisions in the books or made any payments. So in case they have litigated the matter and not provided for in the books, only then there will be some impact.
Okay, Mr. Saraogi, appreciate you joining in. Thanks a lot. We're wishing you all the best for the remainder of this year. Things still looking like it's a bit of a flux, but you're sounding confident about the second half of the year. So we'll keep tracking that. Appreciate you joining in.
All right. Thank you very much, Mr. Saraogi.